Tesla is the largest holding in my portfolio. It's had such hype this year and grown so much. It's clearly the market leader in the EV space. But can it justify its current valuation, or is it a bubble about to burst? Welcome back to the channel, and if you're new here, make sure that you head down and subscribe. First thing you do straight away, just so you don't miss out on any future content that I bring out. It'll be very much stock market related, dividend investing and a bit of growth investing sprinkled in there. Give the video a little like while you're down there, it helps out the channel. Today I wanted to get this out because an article came out on Seeking Alpha. A lot of you, if you're investors and you frequent Seeking Alpha, you will have seen it, I'm sure. But I just want to touch on the article. I've read through it and highlighted some key points and some interesting information on it, which I'm just going to highlight to you in this video. That's all it's going to be. It's just going to be based around one article, but there's some quite interesting points, and I think it's key to get that out there in a video and just highlight some of the sort of main points so you guys can see it. Before we go any further, I'm not going to be giving any advice. I never do anyway, but any advice in this video. Tesla is my largest holding in my portfolio, partly because I bought it at $522, I think, before the stock split. So we're $104 at a current valuation of 2,000 and whatever it is, I don't even know. So it's grown stupendously in the time that I've owned it, which is why it's one of my largest holdings. I'm still bullish on Tesla. I still think Tesla is a great company to hold for the long term. I don't necessarily believe it's going to continue to go up. I don't necessarily believe it's going to dip. I really have no opinion on it at the moment, and that's not what this video is about. It's not an opinion video. It's just going to highlight some points in this article and then make your own comments and comment down below what your thoughts are on Tesla, what you think of the information in this video, in the article, whether you're bullish or bearish on Tesla. It's entirely up to you to make your own decisions, but I'm just going to draw some information from the article. So look, it's going to be interesting because the article's got some very interesting points. So let's get straight into it, and we'll go through exactly what their thoughts are. The author of this article, what their thoughts are on Tesla.
Right, so here we are in the portfolio. So just wanted to, again, complete transparent look. As always, just illustrate Tesla is my top holding here in terms of monetary return. Total market value at the moment is 4,230 odd. I'm not just talking about Tesla for the sake of talking about it. I'm involved. I'm a genuine investor in it. Not by a lot, there's people who've got millions in it obviously, but more than a lot as well. So just wanted to put that out there as well. So, but I'm gonna get straight into it. So this is the article. It's come out literally yesterday on Seeking Alpha. Why Tesla's shares are in a bubble right now. I've highlighted the key points, so I'm gonna rattle through this. This is pretty much going to be a video where I read you an article. So if you don't want me to read you an article, go and find the article yourself and read it yourself. If you don't want to do that or can't be bothered, let me read the article to you and give you kind of the key takeaways and the key points. So summary, Tesla is seen as market leader, which we know, which has resulted in exploding share price. Not always a good thing, exploding share prices. They always need to be justified. So competition is coming, we know that. EV space is getting huge now, and there's a lot of competition, not just from EV specific automakers. He thinks that the valuation is just too high at the moment, and he's got an assumption, bullish assumption. So he's made a point in this first thesis of the article, in that I believe that Tesla's shares are overvalued. This doesn't mean that this potential bubble, he should have put that in quotation marks, can't inflate further. So as I was saying, look, this might not be it. This could go even further. And look, I'm also well aware that Tesla's got a lot of other stuff going on, not just the EV market and cars. So that's going to have an overriding influence on the price. I know that, and it doesn't say that in this article. As I said, just there are also some compelling things in this article I want to get across. So EV sales have grown considerably in the recent years. We know this. EV sales will likely total 2.5 million cars in 2020, based on the fact that close to 1.8 million EVs were sold during the first 3 quarters of 2020. So we know that there's going to be about 2.5 million electric vehicles sold throughout 2020. We're obviously just waiting for the figures in. Car sales in general, estimates say that about 73 million vehicles were sold around the world in 2020. So 2.5 million electric vehicles, based on this assumption, which should be fair enough, make up only 3% of vehicle sales. We've got a graph here that shows the growth in EV vehicles being sold, and we've had some serious growth from 2012, 67%, 55%, 69, 46, 59, 65, and then 9%. We've then got an assumption again down here. Growth was rather uneven during 2019, for example, sales growth by single digits only. whereas they rose by more than 60% during the previous year. 2020 was a year of 10% growth in total. So actually the growth in EV cars has slowed down, which doesn't really weigh in on his argument later, but I just think it's actually quite interesting considering how much hype there's over them and how much they've grown. He goes on, long-term forecast see global EV sales approaching sales volumes of around 25 million. That's a lot more than the number for 2020. But on the other hand, that's still only 1/4 or 1/3 of the overall automobile market. So long-term forecast, that's an interesting point there. Long-term forecast, you know, are we talking 100 years? Because in which case, everything will be electric. You know, what's long-term forecast? Are we talking 5 to 10 years? I kind of figure maybe they mean 5 to 10 years there. Forecast the global EV sales approaching sales volumes of around 25 million. So tenfold to what they are now, which you'd imagine is probably the case long-term, but that's still only a quarter or a third of the overall automobile market. This brings up the question of whether the market is correctly pricing EV stocks now. So this is where he starts to get on to price. So we've got a graph here that shows the EV market. So made up of the main ones. Certainly 1, 2, 3, 4, 5, 6 of those I've got in my portfolio. 5 of them were obviously just the experiment, but have been doing quite well. We've got Tesla at the top here. They make up 80% pretty much of the market. The market is currently valuing the leading EV stocks as a combined market. That is this, the leading EV stocks as a combined market. So they're saying the EV market has a market capitalization of more than 1 trillion, with Tesla being responsible for around 80% of that. It goes on. So this bit's very boring, but I'll read it to you anyway. Assuming it's sort of half important. Assuming shareholders want to see an 8% annual return and that shareholders get diluted by 2% a year, that's dilution of the shares and the number of shares that are actually available for shareholders to buy. Tesla's historic dilution has been higher than that. The market cap of the above companies would be 2.6 trillion in 2030. That's assuming an 8% rise and a 2% dilution. So they're estimating, and this is sort of, I don't know whether this is bullish or a conservative estimation, but they're estimating that based on an 8% annual return that investors would want to see as a minimum, the EV market would be worth 2.6 trillion in 10 years time. Further assuming they will hold around 15% of the automobile market in 2030, which they only hold around 3% at the moment, or about half of the EV market as a whole, with the other half of the EV market being held by legacy auto companies. So we'll get onto that in a second. Obviously, it's not all just Tesla and NIO. We've got other companies involved as well. Very well known, normal legacy automakers that are obviously getting heavily into the electric vehicle space. They also count as electric vehicles, believe it or not. Then the overall automobile market would be valued at a market cap of 17 trillion. That seems unreasonably high to me, considering the investor unfriendly properties of the industry. So he goes on to talk about the automobile market as a whole, how it's cyclical, capital intensity, and then low margins. One could thus argue that the EV industry as a whole is overvalued, but I believe that this is especially true for Tesla. So he's singling out Tesla here. He thinks the whole EV market's overvalued, but he's kind of singling out Tesla in this instance. So in this section, he kind of assumes the overall market cap of the EV market moving forward, which he thinks will be incredibly high and will be overvalued. But in this section, he starts to single out Tesla and why he thinks Tesla are possibly valued quite high at the moment and maybe due for a burst of the bubble and might be a little bit in trouble. So Tesla sold around 500 vehicles in 2020, making it a leader in the EV space. We know that. This does not necessarily mean that Tesla will always hold a strong market position in the EV space. However, there are reasons to believe that Tesla's market position could come under pressure going forward, mainly due to competition. So we've got legacy autos. It took legacy auto companies some time to adjust to the new norm. Understandable. All they've done their whole life since inception has made petrol cars and diesel cars, and that is what they do. You've got these EV companies coming in like Tesla and NIO, who are now the future. We can see that, and it's taken a little while for the legacy autos, the Renaults, the Citroens, the whatever they are, Volkswagen Group that owns a lot more, to start getting in line and saying, we should probably get on board with this. So as I said, we've got main players include Volkswagen Group here, which will release dozens of EV vehicles over the coming years across their different brands, including Volkswagen, Audi, Porsche. Toyota is one of the biggest car manufacturers in the world. They're investing a lot of money into the EV space. Renault is another legacy auto company that has already established a meaningful market share, selling circa 100,000 EVs in Europe in 2020, making it the market leader in Europe. Now we'll go on to kind of the market share geographically as well, because that's obviously a big thing to talk about. Legacy It goes on, legacy autos experience in manufacturing, which should prevent manufacturing problems, and legacy auto is generating higher profits than Tesla. They've been doing it a lot longer, so they know how to cut their margins tighter and create more profit, which will allow higher spending in research and development and capex, which is capital expenditure. Just still talking about the competition to Tesla, we've got, obviously everybody knows about the competition. If you're watching this video, you're on YouTube. If you've been drawn into this because it says Tesla on the thumbnail, which it will do, you also know about all the other EV companies. NIO, if you follow me, I've just done something on Lucid Motors, so we know about the other competition. I think what a lot of people tend to forget about is the legacy automakers that are now, Renault is Europe's leading EV car maker, not Tesla. Renault is, and people don't realize that there's a wider world than just America out there. Investors need to look at the bigger picture, which, granted, again, I've already explained, you need to look at the bigger picture with Tesla as well, in the fact that they're in so many different areas other than just car making, renewable energy and energy storage and things like that. So look, I get that, but also much bigger picture. There's a big wide world out there, much bigger than America, and Europe is huge. And if Renault is actually the leading EV maker in Europe, that's something to take note of right there. So now that we've established that there's obviously a lot of competition from legacy auto makers like Renault being the market leader in Europe, other EV pure plays. So we've got NIO. NIO is probably, to Tesla, the second most popular EV maker around. EV is currently selling circa 60,000 vehicles a year, which is up 100% from the last 12 months. The company forecasts sales of 140,000 in 2020, which indicates another year of 100% plus growth, which is amazing. We've got some serious competition from other electric vehicle companies like NIO, like XPeng, Fisker, Li Auto, Lucid, if they were to taken public by CCIV. Check one of my last videos out. But there's so much competition out there, and that's what this guy's sort of getting at. Tesla's been on its own in this space for so long, but it's not anymore. And then we've got big tech. Third bit of competition for Tesla is Google and Apple. We know now, or we're pretty confident, that Apple is now teaming up with Hyundai, I think it is, to bring out an EV in 2024. So again, more competition. It's not looking good for the competition out there. Everyone's jumping on it. And I'll compare Tesla and NIO to something else in a minute, but I'll do that in a sec. I'll do that after this article. So investors are too focused on the US. So that's what I was saying earlier. There's a big wide world out there. Tesla holds strong market in the US. The US is not the only market that counts. In Europe, Tesla has already been overtaken by competitions, with Renault being the number one EV company throughout 2020. On a monthly basis, Volkswagen has outperformed Tesla in Europe in the more recent past. I think in the more recent past, they mean in the last few months, I would have thought, including Norway, which is sometimes regarded as the national market that shows where the continent is heading in terms of EV sales. Anyway, so look, Europe is already, Tesla's not number one in Europe. Certainly Volkswagen have almost overtaken Tesla already. Certainly they've been outperforming them in the recent months. And we've got Renault are already market leaders in the EV space in Europe. China, biggest automobile market in the world. And it's another market where Tesla's only second best. So BYD in China, Tesla's only second best. BYD, a company that is trading at roughly 1/10 of Tesla's market cap, is the number one player in this key market, while Tesla is only second biggest EV player here. On top of that, Chinese markets can be rather harsh on foreign companies. So we know this. We know that China would like to push their own companies. That means that companies like NIO are going to heavily benefit from that, and Tesla is not. And they're the biggest automaker in the world. So again, sorry if I'm just sort of rushing through this, but it could be certainly incredibly boring just for me to read an article to you, but I'm just trying to highlight the key points. So what Tesla is priced for. In order to see how overvalued Tesla is right now, we can look at a scenario in the future. So this is where they start to make assumptions, and this is quite good. They go quite bullish with their assumptions just to prove a point. So let's assume that EV sales volumes will indeed total 25 million in 2013. Let's also assume that Tesla will hold a 20% market share. They don't think it will. They think that's, well, they say, rather optimistic scenario, as a large number of market entrants could result in a declining market share. But let's go with the 20%. I think that's ambitious, but they're being ambitious with this assumption. So they're going to hold 20% market share. If those vehicles would be sold at an average price of $50,000, then Tesla would generate $250 billion in revenue in 2030, which is a little less than the revenues that Toyota and Volkswagen have generated in 2019. So we're not generating as much revenue in 2030 on a bullish assumption as Toyota and Volkswagen have in 2019. So where's this market cap? Where's this valuation come from? That's what they're saying. Let's further assume that Tesla will generate a net profit margin of 10%, which is relatively high for an automobile company, and which is way more than Tesla's historic margin. So let's go over 10% profit margin. In that rather optimistic scenario, Tesla would thus generate $25 billion in net profits. Normally, automobile companies are valued around 10 times net profits due to certain factors. It's a cyclical market, a high capital intensity, which is what they've alluded to already. If Tesla were to trade at twice that, so normally around 10 times net profits, but again, let's go 20 times net profits, because that's just, let's be bullish with it. We know where we stand. At 20 times earnings a decade from now, then the company's market capitalization would be 500 billion. Tesla's share count has risen quite a lot in the past, so we're going to talk about the number of shares out there as well now. So Tesla's share count has risen by 67% over the last years. That's from diluting shares, stock splits, things like that. Even if dilution rate is just half as high going forward, so again, we're doubling things and halving things to go as bullish as possible. Tesla's share count would still rise to around 1.8 billion in 2030. Dividing a forecasted market capitalization of 500 billion by a forecasted share count of 1.8 billion gets us to a price target of $280. In other words, Tesla's share price could be 60 to 70% lower 1 decade from now. So that's interesting, it's compelling, it's a little bit scary actually when you look at where we are now in Tesla in terms of their value. So just interesting to get that out there. And again, go to this article. It's on Seeking Alpha. It's free to read, and just look at the figures. And as I said, get in the comments, pick it apart if you can. I'd love to hear your thoughts, and I'll take it on board. I'll take everything on board and get what you've got to say. So, has something like this happened before? Yes, it has. So back in the dot-com bubble, Microsoft and Cisco. So we've got a graph of what happened to Microsoft and Cisco here. Around the time of the dot-com bubble, Cisco and Microsoft were easily growing at double digits, while also sporting fundamentals that were quite strong. Revenues in these companies continue to grow well beyond the bursting of the dot-com bubble, and yet their shares dropped. So their revenues continued to grow even after the dot-com bubble burst. Revenue carried on growing, but share prices did. From the peak in 2099 to the bottom in 2009, Microsoft's share price dropped 60%, despite the fact that the company continued to grow in an attractive growth market. For Cisco, share price underperformance was even more pronounced. The stock traded at $80 during the peak of the bubble, and more than 20 years later, shares are still below that level. So the whole point of this section is just to demonstrate that markets can go down as well as they go up, no matter how strong you think they are, and how much hype they've had over the years. Microsoft and Cisco, other computer companies within the dot-com bubble, would have had such hype over them, would have continued to grow in terms of revenue, but their share price would have gone down because there's just been too much hype behind them, push that price up where it didn't actually justify it. So these are prime examples. I'll quickly run through the takeaway here. It's the clear market leader, we know that, but it's going to feel some pressure from the rising competition from the legacy automakers. Tesla's not in the number one position any longer, as competitors are already selling more cars than Tesla. So that is in Europe, that's Renault, and that's Volkswagen Group now. Certainly in the last few months in Europe. Even if Tesla managed to hold on to its 20% market share, which they think is ambitious, as I said, it says they're not at all guaranteed, shares could underperform over the coming decade, which is exactly what they've shown you there in the form of Microsoft and Cisco, because they just think the valuation is too high. So in the same sentiment that this article is kind of trying to get across to you about Tesla being overvalued and the hype around it. There's obviously the example of Microsoft and Cisco there, but there's another example that sprung to mind as soon as I started reading this and started to get to know what they were sort of talking about, and that was Apple and Nokia. So there was, once upon a time, Nokia was the king. There was no other company out there was going to knock them off their throne. They were market leaders by a long shot, and there was nobody else in sight. Nobody could have ever done it. And then Apple came along. So you could look at, Neo could be the Apple to Nokia, and Nokia's the Tesla, sitting pretty at the top. Nothing's ever going to touch them. Huge valuation, but something will come along that could well be bigger and better as well. So I've got a graph up here that shows you all the mobile makers back from midway 2007, it looks like, up to sort of 2008. And we've got Nokia was still in the game there. That's the orange line there. So orange line here, Nokia, pretty much backwards and forwards right at the beginning, with Apple being the blue line, and then Nokia's just tumbled and Apple's done nothing but go up. And the other ones, we've got BlackBerry. BlackBerry was, highs in mid 2008, started to come down and tumble around sort of 2009, and then it's done nothing but go down since. We've got we've got some insignificant ones here, Motorola and Samsung, we know are obviously doing quite well, but the main takeaway is the fact that Nokia was the best mobile phone company out there. And I remember seeing adverts, there was a poster saying Nokia's the king, no one's going to touch them, or whatever it was. And then Apple came along and just knocked them straight off their throne. So Tesla could be the same thing. Let me know your thoughts. Pop a comment down below and just tell me if I'm wrong, but Tesla could well be the same thing. They've had such hype, and we've got these other companies coming in. Is Neo the new Apple, and is Neo going to knock Tesla off its throne? Does it warrant this valuation? What are your thoughts on the figures they put out there on this bullish case, this bullish assumption valuing Tesla at $280? Let me know your thoughts, because I just think that's quite interesting. As I said in the start of the video, I know they've got other streams of revenue. I know they're in different spaces, i.e. renewable energy space, which is fast becoming the next EV and genomics trending sector and industry. So they'll do big things there, I'm sure. So they've got other things going on, I know that, but just on this model here, it's looking like they may well be a little overvalued. As I said, this isn't advice. I'm not giving you a bear case here. You need to be selling out, or you need to short sell them. I don't think you should be buying them on what I've said either. I'm in it and have been in it for a long time, so my average is incredibly low. I will be holding on to Tesla forever, probably. Am I going to be buying in a bit more at this point? No, probably not. So that's where I stand on it. As I said, this video, I just wanted to highlight this article. I thought it was interesting. I thought you'd probably get something from it, save you rooting through the article yourself, and I thought I'd just pick up the key points for you.
So look, throughout that video, I'm sure you've had plenty to say and plenty to make comments about, so just put them down in the comments below and I'll read all of them and I'll reply to them. And just let me know what your thoughts are. Quite compelling arguments in there, I feel, and it's interesting comparing Tesla to Microsoft and the dot-com bubble. Look, lots of caution with this video. Hopefully that demonstrates that it's not all just Tesla to the moon and things like that, because other companies, they've thought the same thing, I'm sure. And like I showed you in there, with the likes of Nokia was unbeatable. No one was going to come along and knock them off their pedestal, and Apple have come and done it, and along with a lot of other mobile companies. So there's just a lot to take away from this, and a lot to be cautious about the stock market. That is absolutely key. That's the main message here, and please always remember that. Don't be drawn in by certainly a lot of YouTube videos that will just say buy and you should buy this and this is going to 10x and things like that. You're just going to be so cautious with the stock market still, and only be putting money into the stock market that you are willing to lose. So that's the main message here, I guess. Always will be my message, and hopefully that kind of comes across in the video. So thank you so much for watching. If you've made it this far, I'm quite astonished, and listen to me ramble on, and I'll catch you guys in the next video. Thank you very much. See you later.